Hello, everyone. This is Alfredo again, and now we have the pleasure here sitting down with one of my friends, and not only, but somebody that I work with a lot because, they're in the same office that my comadre is at right here. But I have Brian Wetzel here with us. Not only are you, you have many titles, but you're owner of Residential Mortgage Services.
See.
So first of all, tell us about yourself. Where are you from? How do you get started in real estate? So tell me a little bit about you.
Sure, you bet. Originally from the East Coast, grew up in New Jersey.
Jersey.
Yes.
I'm a New York guy.
Excellent, love the hat. Went to college in Connecticut. I got my accounting degree there. Graduated, started with one of the big 6 accounting firms in New York City, Ernst & Young. Spent a few years there, got my CPA license. Moved out here for family in the late 90s and started working with a local CPA firm. And that's where the firm I worked for, we had a lot of mortgage companies and banks as clients. And that's where I learned about the mortgage business from the outside as an outside accountant. And one of our best clients was RMS, Residential Mortgage Services, where now I'm proud, been there over 20 years now. And so got to meet Wayne and Rose at the time, who were the 2 owners of RMS, and worked with them as an outside accountant, helping them put together a QC plan, a secondary market, a lock desk, how to put a mortgage company together. And they asked me to join them. I joined them in 2001.
Nice.
And I've been there since. And so my
2001, wow.
2001, yep. And been through a lot. So the 9/11.
You guys came together?
Huh? No, I went there. I got there in 2008. I was close. Yeah.
Okay. I was like,
got it. And so been there since 2001. And so it's neat. My role there, or my title, is Chief Financial Officer.
Yes.
Although most of my time is spent helping people solve problems, working with loan officers, working with underwriters. Our job is to close ahead of time.
Did you do loans before?
Not as a loan officer.
Okay.
I do have my loan officer license, and I do originate loans from time to time for family and friends, but I'm not. That's not my primary role there.
Okay.
If a neighbor or friend needs a loan, I can bring it in, but that's not my role. My role is to help loan officers with their files close, and oftentimes working with the underwriters. If underwriters
He's a peacemaker.
Need an exception, or if we're struggling with a guideline, or we need an exception, or we need to be more flexible, or redo something. Files are challenging.
Yes.
People have job gaps and declining income and credit blemishes, and when you're under contract, it's serious pressure, and our reputation, we take it seriously.
And I was going to ask you about that. Like going from an accountant, like I've known you for a long time, and you're not the typical CPA.
Well, thank you. If that's
you're
I think that's a compliment.
You're pretty cool.
Well, thank
right?
you. Thank you. Thank you.
Well, because unfortunately, a lot of times when we deal with certain CPAs that we talk to them, they're kind of like boring and
more like a statistical type.
And they want to give you all this like. Being with you, talking with you, you actually make things clear. We could understand them better, and you're pretty cool. But I think it also has to do because we know the other side of you.
And he's very animated too, because he's always like, moving. So that's cool, because that's how I am too. Right? So that's good. But so how do you think being a CPA helped you get into the real estate mortgage world?
Yeah, the unique comparison is working as a CPA. You spend a lot of your time researching guidelines for taxation. We're talking about entrepreneurship. We were talking earlier about that. Maybe we'll get into that a little bit here. So especially in the small firm culture, the big 6 culture in New York City, you're working with huge international clients. Here in Las Vegas, you're working with small businesses like yourself. All of my friends, family, we're all small business owners, right? And sitting down with them doing tax planning, how to structure your business. Should you be an LLC or an S Corp, or what's the difference? How do I maximize my tax planning? How do I grow? Everything from marketing to tax planning. There's a lot that a profitability advisor, a CPA, is much more than just a tax preparer.
Yeah.
And so researching guidelines and finding ways to help your clients not necessarily maximize loopholes, but work within the rules to set up your business for success. Okay. It's very similar with a loan file. You've got a loan file and it's manufactured housing, but it's a single wide. And the credit score might be below 620. And there's a job gap and declining income, and they're self-employed, and you start lining up all of these risk factors, and you say, hey, these banks won't touch that loan. These credit unions won't touch that loan. But FHA will insure it. So if you can operate with no overlays and follow FHA guidelines directly, for example, but you really have to dot your I's and cross your T's and understand the intricacies of guidelines. So underwriting guidelines put out by Fannie Mae, Freddie Mac, FHA, VA are very similar to the IRS tax code.
Sorry, thank you.
In the way you have to plan ahead. and understand the details. And so researching the tax code to help a business owner is quite similar to researching a Fannie guideline to help a loan officer structure a file. There's a similar there's a parallel there.
There's a parallel, yeah, and obviously you guys do a lot of research, but
so it came very easy to you.
Yeah,
it seemed to be a natural transition. And when I first came on to RMS, my role was to help RMS manage the finances of the company. Was, in my opinion, the missing piece. We had sales covered, we had operations covered, but the company started as a simple mortgage broker. Didn't really need a financial executive.
Yeah.
Once the company became a lender in the late 90s, once you're actually funding loans and delivering closed loans into the agencies, putting out rate sheets and a lock desk, that's a whole different animal. So to come on board as a financial executive, all I had to do was the financial side of the house, which was easy. It was natural. That's what I was trained to do.
Yeah.
The learning came learning the mortgage business. Now, very little of my time is spent in the accounting office posting journal entries and doing things like that. We have a staff. It's helping people close loans.
But you still stay up to date with all the tax and CPA because luckily for us, working in the same company, that helps us out because you're so familiar with all the taxes and the rules and the guidelines and the regulations that when we have an issue with the tax that we can't really understand, we're able to just walk to Brian's office and ask him, hey, how do we read these taxes? Because this is going on. So it actually helps us out a lot. But going from being as a CPA, you were making a salary, I'm assuming, when you were a CPA. From going from being a CPA to now becoming a part owner of a mortgage company where now you're pretty much just commission-based or percentage-based, whatever, what impact did that have on you? And that's a big risk factor. Like, how did you attack that? How did you feel about that? And what made you take that jump of faith to become your own company?
And to add to that, that was my question I wanted to ask about entrepreneurship. Okay, so how do you break that fear? I mean, I'm assuming that as a CPA you were earning like salary or something like that.
Yes.
But how do you go from that to, because there's always that fear, right? Like just as I mentioned, going from a salary position or hourly or whatever to a commission base, or it's hard. How do you go through that?
That's what stops a lot of people from
being entrepreneurs,
becoming their own owners.
It's risky. It's risky. No salary, no paycheck every other Friday. It's risky, and for lots of us that have done it, and it doesn't always work out.
Yeah.
The way I would start with is understanding financial security. Building financial security starts with not how much you make, but your spending habits.
Yeah.
It's like my kids say to me, Dad, I want to make a lot of money. I said, that's nice. But if you're just going to spend a lot of money, you're back to zero.
Right.
It's not what you make, it's what you spend and your spending habits. Just like at home with our family checkbook, a business is very similar. And so making the leap from, okay, I have a salary, I have a paycheck, okay, and you feel a sense of security in that. That's what my mom used to say. You want a good job with a good paycheck. Hey, Mom, I'm going to start my own business. Don't do that. That's scary from my parents' generation.
It's taboo, right?
And so the concept of if you can manage your outlays where you live beneath your means, the simple stuff that we learned when we were kids, spend less than you make and save the difference. Very few of us actually do that. If you can learn discipline and set goals and save, spend, save, share. And if you save a portion of your funds, then you say, okay, now you're built to be an entrepreneur. Just starting with financial security.
Now you said spend, save, share.
Spend, save, share.
Okay.
Right, we all got to spend on groceries.
Right.
Yeah.
We all have to save. It has to be part of the budget.
Yes.
And we have to share. Right,
Okay.
we want to share,
Yes.
contribute to your community, to your church,
nice.
to your whoever you take care of. And so spend, save, share. Start simple. Stuff that we teach our kids. Start simple. You got $20 from grandpa. What are you going to do with it? Spend, save, share. $5 goes into piggy bank. You can go spend $10 here and there. But bringing that into like entrepreneurship. And so when you make the leap, beyond having an understanding for financial security and spending less than you make and understanding budgeting, coming from the accounting background, I think it helped me because you understand budgeting and financial management.
Yeah.
And so beyond that, it's making a difference You know, the mark of a good life is the world better because I was here. I used to get that. I used to love hearing that. Hey, the world's better because this person was here. That's good. So the world's better because of what Yesenia does. You see her in the office every day fighting for her clients.
Thank you.
It's exciting to be around it. It's inspiring to be around. That's the kind of people I like to be around. And so if it's more than just, hey, I want to get rich, man. Hey, I want to work for myself, to make money. If that's the only reason,
you're doing it for the wrong reasons.
It may not work out.
Yeah.
If I can make a difference. I can do this better. I have a dream. I have desire. I have a goal. Entrepreneurship it's a creative, inspirational thing that to make a leap and say I'm gonna open a business. I'm gonna work for myself or have partners. It's more than just the finances. It's I have a dream. I have a vision, and I have a goal, and that's where it starts.
When you jumped into doing it, do you feel? Because I think it's very important when you jump into becoming self-employed, you already had your
financial security.
You had financial security. Do you feel like when you did this transition, you were already in that place?
No, I was still younger. I was still in my 20s. And so, although I had a little savings account.
But you had a little
I thought you were
something.
20.
Yeah, I was in my 20s.
I thought you were 20 right now.
I'm in my 50s now.
Brian looks very young.
Thank you. I'm 51. Thank you. And so, no, I was younger. I mean, financial security is a little bit different when you're 20 than it is when you're 50.
But you weren't living paycheck to paycheck.
No, not necessarily, but sort of. I mean, I had a small paycheck. I had a small savings, but still, you're still living
Was there
paycheck
fear?
to paycheck. Yeah, absolutely.
Of failure?
Absolutely. You got to have that.
Okay.
There's a little bit. You got to have a little bit of that.
I think that's
to say
actually
absolutely
helps you.
not, no way, man. That's not
bullshit, right?
To me. That's not reality.
But that actually helps you. I think
It does. When you start saying, oh, I'm the greatest. I got it made. Our business is great. Oh, I'm so great. I have no fear. I don't know any successful entrepreneur that lives like that. You're always on your toes. You're always staying up late, concerned about what's the next technology, what's coming with AI. Are we on top of our game? Are we ahead of the curve? We got to keep up with the big banks. We're a small potato. There's a million things we could do better than them, but they got the budget with the technology. So you have to, an entrepreneur, there's always fear. It's always in your belly. I don't know how much you made this year. It doesn't matter how much you made. You should have a little bit of butterfly saying, we got to stay on our toes.
And before I go into the next one, in regards to fear and going into entrepreneurship, was there a time that you failed that made you push that gear to like success maybe? Was there something that happened to you?
The biggest test,
we fail every day, right?
Big time.
But there has to be one that triggers you and say, you know what?
Exactly. And if a failure ends up being learning and growth, then was it really a failure? It's part of life, right? We're meant to be whole,
of learning.
not perfect.
It's a learning curve, right?
Right. And so you're going to have failures and setbacks, and then you're going to learn and grow from it. And so the biggest test and for me in the entrepreneurship were, it was the financial crash of the 2008 era. Getting into the mortgage business just after 9/11. So you get to see 9/11 was a fascinating time, especially coming from back there, and how it affected the mortgage business. Then the run-up of the 2000s, the loan programs, no doc loans, state your income loans, flipping houses, 100% financing. It was nuts. Yeah. And then that had to crash. When that crashed in 2008, the next few years were so uncertain. In fact, the only other uncertainty I've ever experienced is what's going on right now.
Yes.
It sounds ironic that, but what's going on with the post-COVID now, with what's happened to house prices, interest rates, the lock-in effect, with people who have a nice low rate that do not want to resell their home, the amount of people who want to buy homes versus homes available for sale, that is the definition of inflation. Yeah. Too much money chasing too few goods. The inflationary concerns, now interest rates are creeping up again. The uncertainty going on right now, to be honest, is I haven't felt since the 2008 crash.
Okay.
And it's unique all these years later. You say, okay, on one hand, you say, okay, we're built for it. We've been battle tested. We've been through these cycles. It gets back to financial security. Do you have savings? You're going to have to weather the storm as an entrepreneur. Yes. There will be years where you don't make money. There'll be years where you have losses. Your overhead expenses are going to be higher than what you brought in, and you got to make capital contributions. Yes. It's part of the deal. Everyone thinks, oh, it's great when you're making money. Yeah, that's fun. How about the years where you lost it?
Right.
Yeah.
That's not as much fun.
That's like going to the casino, right? Like, oh, I won $1,000, but how much do you lose?
Well, and not only that, but also a lot of these people only see what you're making. They don't see like the late nights. Yeah. Working 7 days a week, taking time away from your family, and all the expenses that you have on a monthly basis to be able to run a business, to be able to honestly put food in your table. And a lot of the times, for example, now you don't only have the stress of being making sure that you can actually support your family. You're also supporting your business and everybody that works for you. So yes, you are right, 100%. I agree with Brian. Like, you have to have that fear every single day. Because if you don't have that fear, for me personally, that's kind of what drives me every day. You know, that, and of course my family. But if you are very relaxed, saying, "Oh, I got this," whatever, then you're never going to want to go to the next level. You're always going to be content where you're at.
And you said, you mentioned something about now people depend on you, right? Depending on you running a good business. People depend on you. But what I want to know is, how influential has the Latino community been to your business? I mean, you have one of your top producers is Latina, right? Over here.
I got to our entire company company started in '96. I met Wayne and Rose in '97. And so the whole time, from day one through today, our company has primarily served the Spanish-speaking community. A lot of that is by default. A lot of that is because the Spanish-speaking community has been locked out by the big banks. And so then you're often then looking at mortgage companies. How many mortgage companies operate with no overlays whatsoever? If you have a social number and a work permit, FHA will insure that loan. Why aren't the majority of mortgage companies making those loans? It begins to feel discriminatory. Why would you say, hey, we're not going to make loans to, if you have an EAD card, A19, C12? Well, those folks are coming from South and Central America. Why? We'll make loans to everybody except them. You start seeing these overlays pop up, minimum credit scores. It's a form of redlining. Right, redlining, not allowed by RESPA, it's geographic. If you say we're not going to make loans in downtown Detroit, that's discriminatory. You can't do that. But to say, well, we're not going to make loans to people with credit scores under 580, who has credit scores under 580? Low-income folks, minorities. And so in any event, part of it's being located here in Las Vegas, the large Hispanic population, and serving the underserved community. We primarily, entirely serve low to moderate income families. And so the big banks, to their credit, they can cherry pick. They just want the $1 million deals and the 800 FICO scores, and it must be nice. And then that's not where we make our living. On one hand, you say, great, that's great, because that leaves an entire market for those of us who serve this community. So the Hispanic community has been, by and large, who we served, clients and our employees, primarily a Spanish-speaking company. I have learned a lot about understanding Spanish. I've come a long way. I can understand a lot of it. I don't speak fluently.
He hears a lot of the office, right?
Especially at home.
I don't speak it fluently, but I can understand quite a bit now.
Now, where do you think now, and I'm sure Yesenia can elaborate on this too, but where do you think now the Latino being one of the largest growing demographics?
Yeah, the growth.
Where do you think that's taken us in the next 5-10 years?
The growth is easy to document for the Hispanic community, especially here in the Southwest, especially in Las Vegas. I think that's also the challenge, because there's not enough affordable housing.
Right.
There's just not enough affordable housing. There's too much demand, not enough supply for affordable housing, specifically for the Hispanic community. And that's why people say, "Oh, I'm going to wait. I'm going to wait till later when rates come down." I wouldn't wait till rates come down. Rates probably aren't going to come down. If they do, it wouldn't be much. And when they do, that's just going to bring more people into the market. Now would be the time to purchase. The sooner, the better. And but the Hispanic community will continue to grow.
Right.
That's documented. And the challenge is going to be affordable housing.
Okay.
Yeah.
Okay.
I don't know if you guys heard that slogan a while back when the rates started rising. It was kind of marry the home, date the rate.
Yeah.
Everyone was talking about that. And now in today's market, now you hear a lot of people saying, gosh, well, how much longer am I going to have to date this rate? You know, because that is really what's happening. I think a lot of us personally thought that, you know, end of last year, rates were going to come, you know, little by little, trickling down. And even this year, they were going to get even better. Honestly, I could tell you sitting here today that I don't see that happening anytime soon.
Yeah.
I think, unfortunately, rates are going to continue to remain how they are, maybe increase a little, come down, kind of like, you know, but staying within the same bracket that we've had over the last year. And that's going to it has a big impact in all of our Hispanics, because unfortunately most of our hardworking Hispanics, they could only afford so much, and there's not a lot of properties available in a certain price range. Do you see any changes coming in the near future to allow more and more Hispanics to take advantage of the market and to continue purchasing, or what do you think would be a great tool to help more Hispanics purchase or encourage them to purchase? Because a lot of them, like you say, they want to hold back because they want rates to come down, they want houses to come down, but again, I don't see that happening.
Sure. Starting with encouraging, the more we educate each other and our clients, our family, our friends about the sooner the better if you're going to become a homeowner. A home, the appreciation you're going to get from your home, what you're going to be paying in rent versus paying down your mortgage, and there's any way you do the charts and the data. If you were to say, hey, I'm going to wait for what I'll get a lot is, hey, rates are at. I'm thinking of doing a refi.
Yeah.
We had a scenario to do some refis right before the election. Rates inched down to the low 6s.
Yeah.
And now they're head back up over 7.
Yeah.
And we could talk a little bit about interest rates and economics in a moment. But to the scenarios, we had some rates going to the low 6s and had some clients say, hey, I'm going to hold off. I said, you're ripe for a refi. You're at 7.0. We're down to 6 1/8. No, they're going to go to 6.0. They're going to go to 5.9.
Yeah.
I say, okay, and let's say that happens. Let's say you're right, and it takes 3 months. Okay, so whereas if you had refied now, you're saving $300 a month. So 369. So you're going to lose $900 by waiting those 3 months to pick up an extra $18 a month.
Yeah.
Take you 2 years. At some point, and then the rates inched up, and those folks didn't refi.
Yeah.
Missed out. And so the scenario about the analogy applies similar with encouraging someone into home ownership. If it's a case where
the benefits of,
we say you have to ask yourself, why are you waiting?
Yeah.
And maybe you're just not ready.
Yeah.
Maybe I don't have the right job, and I literally don't have a job. My credit's not where it needs to be. Okay, I'm 3 months out, I'm 6 months out. There could be legitimate reasons where I met with Yesenia, but I'm still 3-6 months out. Okay, that makes perfect sense. Yeah. What I'll hear a lot is, now I'm going to wait for rates to come down next year. I say, well, where'd you get that from? What's making you think rates are coming down?
Yeah.
And when rates come down, what happens to home prices?
Yeah.
They go up.
At some point, rates going down actually is counterproductive to the real estate. Look what happened during COVID.
Yeah.
And so the challenge you have now is, okay, you say housing inventory is up in the MLS, right, year over year. But it's way down from pre-COVID.
Yes.
Not even close.
Correct.
And what happened to interest rates? And so that's the biggest challenge you have is interest rates we are range bound.
Yeah.
And so yesterday's CPI report coming in at 2.9. The Fed's wants the inflation at 2.0. Mm-hmm. And so the Fed is saying, hey, they're now going to hold off or pause from their interest rate cuts. They might do one or two cuts this year, whereas they were previously planning to do 5 or 6.
Yeah.
And so you have all of these headwinds saying, okay, what happened to interest rates since the election? The honest conversations about tax cuts that aren't paid for.
Yeah.
It's going to be deficit spending. The plan is the growth will be so great down the road that it will cover the tax cuts, but out of the gate, we're going to have tax cuts that aren't paid for, and the debt will be issued, and the deficit will grow.
Yeah.
And then the across-the-board tariffs. Yeah. And so it's inflationary, so the Fed says that we're going to pause. And long-term interest rates, as we know, are kind of the opposite of what the Fed does. The Fed addresses short-term rates.
Yes.
And long-term rates, the biggest challenge for long-term rates is inflation.
Yeah.
Yes.
So if there's inflation expectations, long-term rates like the 10-year Treasury and mortgage securities creep up. So interest rates were probably range bound. You see the experts put out their forecast this past week. They all do their 2025 forecasts. They say we should do our own. We should get on here and do our 2025 forecast.
Yeah, I mean, we've been in the 6 or 7, so
the range bounds are low 6s to low 7s.
Yeah.
It's okay. That's a pretty big range. It's like a safe, low 6s to low 7s. Anyone can say that, right? But if you think about that, that's what we had last year.
Yeah.
And you say, okay, if 2025 is going to look a lot like 2024, and that's not what we were all hoping, right? We were all hoping 25 is really going to pick up. Yes. Oh, it's going to be a killer spring season. And what if it's just incremental? That's the challenge. I think there's an honest conversation to have because a lot of us are so optimistic. Yes. In our motto, it was stay alive till 25. Right. We've been saying that for 3 years. Okay, 25's here.
Now
27.
Now what?
Yeah, and so the second half of this decade into the 2030s, there's so much going on here in Las Vegas. We're in the right business. The next year or 2 or 3, it's going to look a lot like the last year or two. It's very challenging times.
And obviously we can talk about this all day.
long.
I always enjoy talking to Brian because he has so much information with Brian. But I want to appreciate you for coming. I want to thank you for sharing the information, the knowledge that you always share with me when we talk and stuff like that. Like every time I go to your office, I always go and sneak see if he's there just because I want to hear something, see what he's got to say.
Yeah.
But I appreciate you. I love, and this is coming from somebody that's been in different offices, and I love the environment that you create in your office. I don't think a lot of people do that. And obviously, everybody in your office is always happy.
Thank you. So, it's unique. The mortgage business has become stay at home. Your docs come from Florida, underwriters in Utah, these folks in India, which is beautiful to use technology, but to still have a company culture where we all get in there.
You guys do.
It's unique.
And I love it. I mean, I get invited all the time, so, I'm always eating stuff, But I appreciate you. Any last short advice that you want to give to the audience just, on the forecast for 2025? And you can use this camera.
Got it. I wouldn't wait. If I was thinking of buying a home, the sooner you get started, the better. Interest rates are probably going to be creeping up for a while, and there's a lot of uncertainty out there. And before the spring season gets too hot and you have too much competition, I would start sooner than later. On the topic of entrepreneurship, there's got to be a little bit of fear in your belly, but faith. If your faith outweighs your fear, do it. It's very exciting to be an entrepreneur. I'm happy to help talk shop with anybody working with us. There's no hourly rates. If people want to sit down half the time, we're talking about business ownership, we're analyzing tax returns. Happy to anyone who gets a home loan with us. We spend more time doing financial advising and talking shop about business structures. And so happy to help anybody out there who wants to just call in or come by and talk about how do you start a business? What would it look like? What does it take? We can help people put a little budget together. And all we ask is when you do buy a home loan, come think of us. Right? That's all we're asking.
Well, I appreciate you, ladies and gentlemen. Brian from Residential Mortgage Services.
Thank you.
I'll see you guys on the next one. Yesenia and Faro. Residential Mortgage Services.
Residential Mortgage Services as well. But honestly, thank you very much for being with us here, Brian, and thank you for sharing all your thoughts, all the information. I think is very valuable for a lot of people listening. But also very important, believe in yourself.
Yeah.
If you do want to start your own business, trust yourself, trust your gut. The fear is always going to be there, but it's actually what's going to help you succeed.
I know. And support the Latino brand. So that's my message to you guys. We'll see you guys in the next one. Sure.